Hello everyone and welcome again to Hybrid Accounts, and today we're just going to proceed with the new topic, inventory IAS2. So let's take a look at this example. Alright, first of all, let's go to the requirement. We are required to calculate the inventory cost per unit. How do we know inventory cost per unit? As I told you before, inventory cost has three components: purchase price, cost of conversion, and those costs are other costs that are directly attributable to bringing the inventory to its present location and conditions. Now let's take a look at the example and proceed. We are told here that the following invoice relates to a purchase made by T traders. So T traders is the purchaser, is the customer. Maybe T traders bought goods from Alpha Company. He bought product A 100 units at 20,000 each, giving you a total. Oh, so this is 2,000, not 20,000. This is 2,000. All right. This is 2,000, giving you 200,000. This is 2,000. I'm repeating again. All right. We are given taxes here. These are the taxes that were paid: 60,000. Trade discount, 20,000. All right. And we are given further information down here. We have import duty of 70,000 was charged by the custom authorities on the above consignment. Also, we are told that taxes above comprise of 20,000, which can be reclaimed. The balance could not be obtained. Anyway, you have a lot of information, and you need to know the inventory cost per unit. Now, as I told you in the previous video, that you really need to know the components of cost, right? As I said, there are cost of purchase that would be purchase price, import duties and other taxes if they are not refundable, and then you would have transport and other handling costs that are used to bring inventory to their working condition. Then you will less any trade discount. For example, you've purchased something and you have been given a trade discount, then you have to reduce the trade discount from your price, and usually from the list price. You can have cost of conversion in case we are manufacturing something, and also you can have other costs attributable to that to bring the inventory to the present location and condition. Now back to our question. So let's start with one element after another, all right? So here we're given information about taxes, here about delivery, and here about delivery to transportation. So starting from above here, this is the cost of the product purchase price. We bought 100 units. This is 2,000. I'm repeating again, not 20,000. It's 2,000. So 100 times 2,000, you obtain 200,000. Obviously, it's the purchase price, so it will be included. So I would come to my answer here. I would say here, product A price equals to 200,000. I've heard the thousand above here. Current is in thousands. And then we proceed with the question, all right? So we have taxes here and we have trade discount. Now let's come and read the information. Then we combine it with the information above here. We are told that import duty of 70,000 was 75,000 was charged by the customer authorities on the above consignment. Usually import duties are non-refundable. You pay and it won't be given back to you. So it would comprise the cost of inventory. So I would go down here and add import duties here. I would say import duties and then say 75,000, just like that. And then we proceed. If we proceed down here, we are told that the taxes above, all right, we are shown the taxes above comprised of 20,000 TZS, which can be reclaimed. The balance could not be claimed. So what does it mean by this? The total taxes here was 60,000, as you see up here, 60,000. But we are told that we could recoup, we could take back, we could claim 20,000. If we could claim it, it's like we didn't pay for it because we paid for it, but it will be returned to us. So I have to remove that from the total taxes because these taxes should be non-refundable. So I come down here and I say taxes, it was 60, I less 20, and I remain with 40,000, just like that. And then you proceed with everything. So up here, you have dealt with product A already, you have dealt with taxes. You have to go hand in hand. We are left with trade discount. We could deal with it later, no problem. So let's proceed with our explanations. Here, the goods were delivered by the supplier to a warehouse 50 miles away from Tea Trader's factory. the supplier incurred transport cost of 30,000. These are the cost of the supplier. They have nothing to do with tea traders themselves. So it's very much obvious that the supplier's delivery costs have nothing to do with us. So they should not be included, right? This is obvious. And then we are told the local transportation cost. The local transportation cost incurred by tea traders was 25,000. This is local transportation cost. That means that after tea traders had bought the goods, it had to transport the goods to, let's say, warehouse, wherever, where the goods would be in the present location. So we have to consider this as a carriage inward because carriage inward costs usually form part of purchases. So local transport or carriage inwards would be added there, which is 25,000. And then you proceed. Here we are told three traders sold product A to Mag's company. To transport this product to Mag's, three traders incur transportation costs of 21,000. Oh, this has nothing to do with the cost of inventory. Inventory was ready for sale, so that is a selling cost, or I could call it carriage outwards. The cost that I incur to transfer goods from the warehouse to the customer. So these are just selling costs to Mags and they are carried outwards, so you cannot include them. All right. And lastly, I think we're done with the explanations with the additional information. So we could just go back to the question to take a look at what we haven't worked with so far. This 26 is just the total 260, so no problem. Then let's go to the trade discount. As for trade discount, I would say that I had a trade discount of 20,000, so I have to deduct it as usual. Trade discount, that means I didn't pay for it. So I would come here and less trade discount of 20,000. And if I do that, I would have 200 plus 75 plus 275 plus 40, 315 plus 25, 340 minus 20, 320. So this would be the total cost of my inventory, all right? So the question required us to compute inventory cost per unit. So I would say inventory cost per unit equals to total inventory cost over inventory units. So inventory cost per unit equals to 320,000 over 100 units. Remember your costs here were in thousands. So I just divide and I end up with 3,200 per unit. That's what we do. Then we say the rest of the cost should be expensed in full in the period. The rest of the cost, it will not use supplier delivery cost. Actually, this is the cost of the supplier, so it will not appear in the books of the traders. But as for selling cost, this will appear in the books, so it has to be expensed. All right. So this is what you really need to do. Of course, this 20 here, it was the tax that was refundable. And lastly, yeah, it's just like that. So thank you very much. If you haven't subscribed to the channel, you can subscribe for regular updates. Thank you very much, and until next time.